Our theme this year, Connecting Market, Shaping Future, is both timely and meaningful. The global landscape is shifting rapidly as investors increasingly seek transparency, security, resilience, and world-class infrastructure. Singapore has sharpened its focus on strengthening its position as a trusted global gold trading and voting center. By fostering a robust ecosystem spanning mining, refining, secure logistics, institutional trading, and voting, and digital gold innovation, Singapore is positioning itself as the bridge between the established markets of the West and the rapidly expanding markets of the East.
At the World Gold Council, we believe the future of our industry is digital, and that digitalization will truly unlock gold's full potential as an asset that promotes financial stability, protects wealth, and expands financial inclusion. In my mind, digitalization will enable three things. It will maximize access to gold. It will maximize gold's potential by opening up new use cases. And it will maximize the transparency of the supply chain to improve trust.
But I think probably the most relevant news for this group is that LBMA is considering moving the morning auction into Asian hours. This is to reflect and to allow price discovery within the Asian timeframe, something that I know the market has asked for many years, but I think it comes at the right time.
Platinum's recent price movement reflects something long anticipated, a recognition of fundamentals. Years of consecutive supply deficits have drawn down above-ground stocks to historically low and unsustainable levels. And that reality has now been reflected in price. For investors, this matters. Platinum is a rare hard asset. Like gold, it offers diversification and a hedge against currency and equity market risk.
As the regional exports picked up, the regional countries will need even bigger foreign exchange reserves to basically safeguard, to ring-fence this newfound prosperity against the multipolar world, against all the volatility in policies, whether it's trade coming out of the United States, against volatile currencies and interest rates. And with bigger foreign exchange reserves in the region, obviously, we will need more gold reserves.
Earlier this morning, we also witnessed an important milestone, the signing of MOU between Singapore Exchange Group and the First Group of Clearing Bank marks an important step in the development of Singapore precious metal market infrastructures. On behalf of APPMC, I would like to thank SGX Group and the participating bank for their commitment and leadership. But having strong ingredients is not the same as having a complete market. Market requires infrastructure, and market requires common standards, and market requires confidence. That's the purpose of Project Line 2. It's not a slogan. It's not a branding exercise. It is our building the infrastructure needed for Singapore to become a more complete precious metal market. Ladies and gentlemen, the opportunity is real. The vision is clear. The partnerships are in place. The work has begun, and today we move from vision to execution.
This morning, we have heard about Project Line 2 and Singapore's effort to build a stronger clearing and settlement mechanism. What does this mean for ASEAN?
ASEAN still not need a lot of things to fulfill, to let ASEAN people to be growing up, because volume is there, needs real support. So this is the big gap. If the project Lion 2 can support to Southeast Asia, it's going to be help the market growing up and as sustainable.
The biggest gap is trust. We have gold, we have mine, but without trusted standard, and efficient settlement.
Basically, three things. Know your customer, of course, know your commodity, know your connectivity as well.
We're building a trusted center here. We are also building gold products that comes with technology, come with innovation.
ASEAN cannot just rely on theory alone. It needs practical connectivity. That's trusted vaulting, bankable counterparties, clear standards, efficient settlement.
Where the PGM's market heading from here? What will going to drive the next phase of demand growth, and how might Asia reshape the global PGM's landscape in the year ahead?
The incredible aspects around platinum group metals is they have kind of two main attractive points when it comes to investment. The first is what we all look at, when I've looked at for 20 years, which is the fundamental side of things when you look at supply-demand forecasts, especially when you're talking about industrial consumption for things like platinum group metals. And the second, which I think has really emerged over the last 5 or 6 years, is the alternative investment to things like gold.
Investment demand, I think that is actually the game changer, right? I think that's the game changer for the past 13 months. I'm sure you recall the multiple years before May of 2025 when platinum was trading range-bound, centered around roughly $1,000 per ounce. Back then, we used to spend a lot more time on analyzing, auto-catalyst demand modeling, supply disruptions. These were the most important factors that we would use to explain a $50 or even $100 move in price, which back then were very big moves in prices, right? And then that picture completely shifted, and that is because of the very strong investment inflows.
So we believe that, I think, in the next 3 to 5 years, AI infrastructure building is going to consume more and more PGM, especially in platinum, rhodium, and also iridium and the ruthenium.
Today's discussion just highlights us how quickly the PGM's market is evolving and how many opportunities and questions lie ahead for the industry. What happens next remains to be seen, but one thing is clear. This is a market that will continue to give us plenty to talk about.
The objective of this session is to bring out how an integrated China market and Hong Kong can add value to the precious metal industry in APEC region. Hong Kong also acts as crucial bridge between China with APEC region and the global market.
The Hong Kong's value proposition is actually quite simple. Demand, demand, demand. Now, the first demand is the wholesale demand or purchase of gold by China, in which Hong Kong is a major gateway.
In 2025, June, the Shanghai Gold Exchange activated its international board warehouse in Hong Kong, which actually simultaneously launched 2 renminbi-denominated contracts delivered in Hong Kong. So this is regarded one of the great milestones, which means that investors can access to the renminbi-denominated contract in Hong Kong and can be delivered onshore and offshore. So I think all of these above have granted Hong Kong the capability to join the community and expand the overall capacity and liquidity for the whole region.
都能提供很好的一些金融服务，例如清算啊，例如这个资金的融资啊，还有一些这个结汇等等的一些业务，所以我觉得这3个加在一起是香港一个非常非常大的一个优势。我们觉得我们也很幸运，朋友能够参与香港的这个贵金属的建设的环节之中。
And we heard the word collaboration, we heard the word vision, we heard the word innovation. Let's wait for excited development of the gold market in this region.
How the 2 major markets like India, China, and also the large Middle East market will be connecting the liquidity pool for this part of the world, Asian market, which is the largest.
There are 3 major or 3 large liquidity centers in the world today. One is London, which is mainly the spot market. Then you have New York, which is the futures market. And then you have Shanghai.
So Dubai, we all know last 5 to 7 years, if you see the market has grown from maybe a 1 ton to 5 ton, it became 5-fold higher. Dubai was, majorly hub for the refining.
Hong Kong is now actually moving from a policy signaling into an implementation phase. So basically, especially actually if you look at it, it's like now basically the first phase is to actually establishment of a central gold clearing system in Hong Kong, accompanied by expanding the voting capacity to about 2,000 tons over the next 3 years, and also closer integration with China and also SGE.
Pool of liquidity is moving closer to the market where the demand is. And hope all these development, all these efforts will translate seamless liquidity flowing between London to closer to the marketplace.
We are going to go beyond gold. We are going to cover silver and the PGMs. Both metals have hit record highs this year.
The auto sector accounts for over 40% of platinum demand and over 80% of palladium demand.
Silver will remain as the key metal within the solar space for the foreseeable future. AI infrastructure and data centers, this is obviously getting a huge amount of coverage at the moment.
Thank you so much for diving into the demand trends with us over the next few years. It's not an easy task, this session. We're looking into the future, we're projecting what the alternatives could be, and there are so many unknowns, especially when it comes to AI demand, electrification of vehicles, what the EV market outlook looks like as well. But I think you provided us with some really great alternative views.
That trust is fundamental, that consistency and standards are a key solution to fragmentation, and that is key to building trust.
We do a lot about know your client, but you do very little about know your asset.
Credible responsibilities, credible sustainability in your sourcing is quite poignant, and that involves things like ensuring that you're investigating your supply very, very thoroughly, you're documenting it incredibly well, and doing it all in a very auditable way. Similarly, that's critical for then strengthening that trust from a customer perspective, because without that auditability, without that transparency, your customers are going to question exactly where that information comes from.
LBM's Responsible Sourcing Guidance version 10, RGG 10, is built up on the feedback on RGG 9. On one side, it provides more clarity and definition to existing requirements.
There is now a forum to allow us to start to discuss what we call baseline expectations across a bunch of principles on responsible sourcing and sustainability.
In the last 6 months, in fact the last 18 months, we've seen breakneck rallies in the gold price over certain periods, rallies that we haven't seen in a generation. And that's been underpinned by extremely strong investment demand and in spite of the lackluster performance of the jewelry market. But what's been quite spectacular for us is the limited reaction of the recycling market to the price environment. If you consider that we've had year-on-year, in 2025, we had a year-on-year increase in the average price of over 40%. Seeing a less than 3% increase in global jewelry recycling is quite impressive. And if you compare it to what happened back in the 2009 to 2011 period, where we had an explosion of recycling, it's quite an interesting backdrop. And I think it's reflective of the fact that in most price elastic markets, most major recycling markets, consumers just don't want to get rid of their gold, given the uncertain environment that we're living in. All the other factors that have been underpinning gold over the last few years, the last couple of years, whether this is fat tail risks and extreme uncertainty on US policy, and of course concerns about the outlook of the US dollar, the extreme levels of US debt and sustained deficits in that country. I think all that remains in place, and with this in mind, we have to be bullish gold. What do you think this means for gold prices, and if you want to stretch to gold investment in the short, let's call it 1 to 3 months, and the medium term, let's call it the next 12 months?
12 months out, we're looking at a quarterly average in the second quarter of next year at 53.50. Given normal volatility, I think we're not going to be far off the $6,000 mark. And why? At some point, we are going to have inflation stabilize.
I'm super bullish on gold with this global debt situation and also devaluation of the fiat money. I see no reason that gold go down from here to 2,000, 1,000, 20, 30 years ago price. So I'm quite happy to buy the dip.
I'm increasingly seeing questions and a lot of appetite to have gold in their portfolios for the very reasons that Bruce was mentioning. Yes, equities are doing great, and I think it's actually quite surprising to me how gold has been doing when you have risk appetite to that degree and such impressive by historical standards equity valuation increases, and still there's interest in gold.
A room with no bears.
Well, thank you all for staying with us.
There are three key takeaways for me to start with. First, Asia's importance in precious metals markets continues to grow, and market infrastructure is beginning to catch up with that reality. Second, trust remains the industry's most valuable asset, whether expressed through governance, transparency, standards, regulation, or infrastructure. And third, the future will belong to markets that are connected. The next phase will involve something less glamorous, but arguably more important. The hard work now has to begin. And that means building rule books, establishing governance frameworks, defining operational procedures, creating participant standards, and ensuring market integrity. The message was that credibility matters more than perfection. Rome was not built in a day, and markets are not going to be built overnight. They are built through collaboration, execution, strong governance, and trust earned over time.
Trust, transparency, collaboration, addressing those liquidity pools and collaboration across the gold sector as a whole, but also that we continue to see many diverse and interesting demand trends that are emerging for the gold sector as a whole.
Three days ago, many of us arrived here as colleagues, customers, suppliers, competitors, and business partners. Today, we live as a stronger community. This year will be remembered for an important milestone. We witnessed the signing of the MOU between SCX Group and the first group of clearing banks supporting the development of Singapore precious metal clearing and settlement infrastructure. It represents another important step in Singapore's journey from being a trusted storage and trading location to becoming a more complete institutional precious metal market center. We also share updates on Project Line 2 and the broader effort to strengthen market connectivity, infrastructure and confidence across Asia Pacific. As we close the APPMC 2026, we are already looking ahead to APPMC 2027. Next year will mark a very special milestone, the 10th anniversary of the Asia Pacific Precious Metal Conference. What began in 2017 with 330 delegates from 23 countries has grown into one of the industry's most important gatherings in the Asia Pacific region. This achievement belongs to all of you. To our members, sponsors, speakers, partners, and delegates, thank you for your trust, friendship, and support. The conversation do not end here. The partnership formed here will continue. The opportunity before us are becoming larger. On behalf of SPMA, thank you for being part of the journey. Have a safe journey home, and we look forward to welcoming you back to Singapore next year